So the main resources which is needed to do blended finance, you will find grant, concessional resources like loan. You will also find commercial loans. So it's a variety of this type of instrument which make blended financing possible. You will find the grant instruments mainly on the main global mechanism like the GCF, the Green Climate Fund, the Climate Investment Fund, the CIF, and the Global Environmental Facility, the GEF, which are the main vehicle at the global level. But you will also find them in thematic funds, which are created, bilateral funds, which are created with donors countries. And you also find those kind of grant instruments with philanthropies and impact investors. The type of sector which require blended finance are mainly where you have a transaction where you will have an extra cost related to the use of a new technology, for example. There you will, it will increase the cost of this transaction and make it unattractive for private investor. So the idea is to use the kind of mechanism like grants, concessional loan to reduce the cost of this transaction. You will mainly find them in renewable energy, where you need the use of innovative technology. So when they start, those kind of technology can have an incremental cost. So you need to support that through the use of this kind of financing. We are also talking about sector and transaction where you need times to reach the return on investment on those transactions. So here you will use concessional loan or just even commercial loan, but with a long maturity. You will find them mainly in the sector of forestry, some also resilient infrastructure where you will reach a tipping point, but later on the life of the project. You will also need those kind of blended financing in transaction where the perceived risk is high, so where you will need the kind of de-risking instruments to allow private investment to come into those transactions. Those kind of instruments to de-risk will be guarantee, hedging instrument, for example. And those kind of instruments actually can be used in most of the climate and environmental sector. I think the first things that the private investor are looking for is to have a clear idea of what are the sector of priority of the government. After is really to be confident in terms of the kind of support and the government can provide. So first is really defining the sector of priority. Second will be to enabling the environment, so to facilitate with putting in place some policy and also regulation which will be in favor of those kind of investors. And also the last part will be to allocate part of the public resources to de-risk transactions. So private sector will be able to start doing more green investment, and we'll see in the coming years a decrease of the need of these public resources, because public investor will now be used to this kind of transaction and will be able to structure them better, so it will reduce the risk of those transactions. The main challenge is to have first the various type of financial product available at the same place. Because to do blended finance, as we described before, we need different type of financial products coming from the grant, coming from loans, concessional loans, equity. So you need to have these various type of capital available at the same place in the same vehicle. So it's really most of the time you don't have this kind of variety of instrument. So it makes it more difficult. You have to apply, for example, to a specific global vehicle to get some concessional loans or grants, and after you have to mobilize less concessional resources from an MDB, and after even less concessional resources from a private investor. So that's why it's really important to create blended vehicle It's also a main challenge is to have those kind of blended vehicle, but at a local level, because we know now that this is the kind of blended financing we need to allow green investment and also to support climate action. So it means that we need as well those kind of vehicle, blended vehicle, at a local level. And after the other challenge is that those kind of vehicles need to be run by the people who has the appropriate capacity to do that. Because when we say blended structuring, so it requires a kind of capacity which need to be acquired, and also when it's related to those kind of sector. I think yes, mostly. Why? Because we're also talking about new technology. So so new technology will not depend on the country's economy situation. So even in a more wealthy country, you will have a new technology which come with an extra cost, where blended financing may be required to allow this technology to be widespread and become more affordable at a certain time. Yes, I think most importantly for a government is to pay a lot of attention on the quality of the pipeline they are developing. So really, to mobilize resources, you need a good and well-structured and bankable pipeline. So the time and the effort you put into the definition of your priority and sourcing the appropriate project and spend time to prepare it so they are attractive to private investor, it's a really important thing. And you also have to be inclusive. So, to bring as well private investor at the table. So when they define the pipeline, we make sure that they have the characteristic which will fit both their own strategy, but also the demand and the appetite of those private investors. I think the public resources need to be very, let's say, as you say, strategic in its use. It means that they need to focus on the kind of mechanism of provision of financial product which will have a most catalytic impact. So, for example, we see now, it's not new, but the use of hybrid capital. So you use this kind of resources to be able to leverage additional resources on the market. So this is a kind of use where public resources are catalytic. Also the kind of technical assistance, project preparation, those as well are important. Pipeline development is really a way to use public resources, which is very catalytic because it will lead to more investment. And also, we are the African Development Bank working on the Green Bank initiatives, and we are creating an ecosystem of those kind of blended financing vehicle on a local level. So they will improve direct access to the climate finance resources for local communities, but national and also private sector. And so on those kind of vehicle, you need a small part of public fundings to be able to mobilize additional private investment. So this kind of innovation, innovative mechanism, they don't need too much private resources, but they are very catalytic to leverage private investment. Why? Because they support to de-risk those kind of transactions. They are also important and powerful resource mobilization mechanism because they have the capacity to mobilize domestic resources when we know that it's really important to provide capital in local currency, so it doesn't increase the cost of capital for this kind of transaction. And they have also the capacity to mobilize additional funding from external sources. So it's really, so there is different solution for a government, but I think that the priority is really to target those kind of solution, which is not only project basis, but more create a pipeline of project and provide guarantee or capital to mobilize additional resources on the market or from private investor. Actually, what the African Development Bank is promoting is a new initiative, which is built on the model of Green Bank or Green Financial Facility. So it's called the Africa Green Bank Initiative. The objective is to create an ecosystem of blended financing vehicle, which will be hosted in existing commercial banks, or it will be created at a national level for the country NDC's implementation and long-term strategy in terms of climate and environment. We already start this year with the creation of the first two green finance facility in Côte d'Ivoire within the Banque Nationale d'Investissement of Côte d'Ivoire, BNI, and also CDCB Bénin, which is la Caisse des dépôts et consignations of Benin. So we are already starting because the need is there. We see that countries are looking for financing mechanism to implement their NDC. We know that there is a big need, 2.8 trillion by 2030. And so we need to really think in a catalytic way. So those kind of vehicles are very catalytic because they mobilize domestic resources, but also external resources for the climate action. And they also have the capacity to improve direct access of this finance to local communities, SMEs, but also large company. Why is it important? Because right now we don't have intermediaries in climate finance. Most of the climate finance is hosted within the global mechanism like the CIF, the GEF, the GCF. MDBs have a little bit of it, DFIs as well, but not too much. And we need to have those intermediaries to be able to provide this kind of resources to the project developer. Otherwise, climate action will not be able to be done without those projects and without supporting those project developers on the ground. Africa is it's really important as well for Africa because we know that adaptation is mostly very local. Sector of adaptation are dealing with local communities. So how do you create financial products which support financing the adaptation to climate change through project? So those kind of blended vehicle, they will support the creation of pipeline of projects, and they will have the capacity to finance it. So this is a very powerful model, and we want to replicate all over the continent. So this objective is to cover all Africa, to have national, regional, but also local green finance facility. And we start this year with a pilot phase where we provide technical assistance to support our partners in creating their own green finance facility. And we will also support the capitalization of those facilities alongside those partners who are committed to capitalize around 10% of the need of their own facility, but also along DFIs, MDB, climate finance mechanism, and also private investor. So the main challenge for countries is really to prepare a pipeline which is well structured and fits private investor criteria. It has to be aligned with their strategy, their country strategy, and the sector of priority they are focused on. So it's really important that to have the capacity, internal capacity to build those kind of pipeline, and to have an inclusive approach where you involve private sector and private investor to support as well the definition of this pipeline. So it's really important to have this stakeholder and inclusive approach between public but also private sector. So why is it very successful, those kind of green finance, local green finance facility? Because those kind of institutions like CDCB, Caisse des dépôts et consignations of Benin, which are a kind of pension fund, they are liquid. They are very liquid. So it means they have important liquidity available labeled in local currency. And this is what we need to do more green investment on the ground. So it means that when they will have the capacity to structure and understand how they can mainstream adaptation and mitigation into projects, into their portfolio, but also source those kind of new projects, then we'll have a running vehicle which will have the capacity to continuing innovate and source new projects and also finance them and mobilize resources from public sources like tax or regulatory measure which are in favor of the capitalization of this vehicle, but also externally, because they will act as lead arranger on those transactions. They will have the blended financing available, so they can take the part of the riskier, the riskier part of those transactions, and they will be able to attract private investment at a local level, but also externally. So if I take the example of the Africa Green Bank initiatives, we have a major actor who is supporting this initiative, which is Amundi. He's one of the main asset managers in the world, and they are supporting those financial facilities, the setup of those green finance facilities in the definition of the pipeline, which will suit the best to the appetite of private investor. And also they have the capacity with important green funding vehicle they have to invest as well, to support part of the capitalization of this vehicle. So this is the kind of model we want to see, where we fit local, national objectives and needs, where we involve as well private sector and private investor from the domestic market, but as well from external counterparties. Today, most of the sector of climate environmental sector needs blended finance. We will say the major in renewable energy. So it can be, solar now, you see that solar is now, the technology is more advanced, so the costs are now reducing, so we need less and less blended finance or concessional resources, I would like to say. But you see new technology like green hydrogen, battery storage, those kind of new technology which are less advanced but which have an enormous potential. So they are a little bit costly right now, but you need those kind of blended finance. So we can support this extra cost of those new technology, of the use of this new technology, and also with the time they will become more affordable. So even the private sector could support the cost of those technology. We'll also find the forestry sector, where you need long-term concessional resources, or even not concessional but long maturity loan. So those kind of biodiversity protection and forestry sector need to have those kind of blended finance. I will also talk about resilient infrastructure. We need most of time to they have an extra cost to make this infrastructure resilient to the impact of climate hazard. So you also need these concessional resources or grant resources to cover sometimes the extra cost to make this facility resilient. So it means that to make the decision process, to ease the decision process from a traditional old-fashioned, let's say, project to a project which is resilient and more sustainable in long term, then you need to cover at the beginning this extra cost, and after more and more you will see that the infrastructure will need to be resilient, and this will be a criteria. So for now, we still need as well in the sector of resilient infrastructure some blended financing. So yes, most of those sectors. So I want to mention smart agriculture, where you also make the use of technology to make the crops and the production to adapt the production to the climate. So those are also very innovative solutions which need to be supported by this kind of concessional resources.